A lender looked at this loan and wrote it off completely, marked it as worthless on their books, walked away from it. Here's what we found when we actually looked closer. This is a real mortgage note, $65,000, and on paper, it was dead. No payments coming in, no plan to fix it. Filed away as a loss. That's usually where the story ends. This time, it isn't. Let's start with why a lender does this in the first place. A borrower falls behind. Months pass. The lender's own cost to chase it, legal fees, servicing, staff time, starts to outweigh what they think they can recover. At some point, on their books, it's easier to call it a loss and move on and keep fighting for it. That's not a judgment on the property. It's a decision about the lender's time and resources, and those aren't the same thing. So the first question in any case like this, is the loan actually dead, or is it just inconvenient for a current holder? Those are two very different problems. Hey, I'm Mario, and I've been spending years working two parallel lives. Real estate investing with my wife Lorinda since 2006, and the corporate world of finance running alongside it the whole time. Between those two worlds, I've learned that written off and worthless are almost never the same world. One's an accounting decision. The other is a claim about reality, and knowing the difference is exactly why we're here. To help you see what's actually true underneath the label. If this is adding value to you, please like it, subscribe, and pass it along to someone who might need to see it too. It means a lot to us. Now, let's open that file. First thing we check, always, is the collateral. What is the property actually worth today? And how does that compare to what's owed? On this note, the loan to the value came in well under the property's current value, meaning there was real equity sitting underneath the note that somebody had already decided is to abandon. That's finding number one, and it's the one that usually gets missed. Second, we check the payment history. Not just whether the payments have stopped, but why. And whether the pattern shows a borrower who's unable to pay or one who fell behind during a specific, identifiable stretch and has since stabilized. In this case, the borrower has gone through a job loss 2 years earlier, missed payments during that window, and had been slowly catching back up since. Informally, without anyone from the lending side ever reaching back out to restructure anything. Third, we check the lien position and chain of title, making sure that the paper is actually clean. That whoever's selling this note generally has the right to sell it, and that there's nothing sitting ahead of us in line. On this file, everything checked out. First lien position, clear title, nothing else attached to the property ahead of this note. 3 checks, real equity underneath it, a borrower who wanted to pay and mostly was, clean paperwork. None of that showed up anywhere on the lender's balance sheet, because none of it mattered to their decision to write it off. So here's what actually happened. The note traded at a discount for around $65,000, well below what it was actually owed, because the seller wanted this liability off their books more than they wanted top dollar for it. The new note holder didn't inherit a dead asset. They inherited a borrower who was already most of the way back to current, secured by a property with more than the loan, at a price that reflected the seller's urgency, not the collateral's actual condition. Let's put real numbers on what that actually means month to month, because it worked out isn't the same as seeing it. The original loan carried a payment around $600 a month at its stated rate. Bought in at $65,000 against a loan that size, the monthly payment works out to roughly an 11% illustrative yield once the borrower is fully current again, secured the entire time by a property worth meaningfully more than the note. Again, just an example, but every file is different, and yields like this reflects a distressed purchase price, not a promise about any future deal. Now, I want to show you the other side of this too, because not every file like this ends the same way. We looked at the second note with almost the identical setup on paper. Written off, similar balance, similar backstory. But when we pull the payment ledger on that one, the borrower hadn't made a single payment for over 3 years. And the property itself had sat vacant long enough that its condition had genuinely deteriorated. Same headline, but a completely different reality underneath it. That one we walked away from. The free checks aren't a formality. They're the entire reason one of these notes was worth rescuing and the other one genuinely wasn't. If you watch Wednesday's video about the $58,000 decision, this is the same third door, just seen from another side. That video was about choosing to walk through it. This one is what actually sitting behind the door once you do. I want to completely straight with you here. This isn't a guaranteed outcome, and it isn't the story of every distressed note. Some notes really are as bad as they look. And part of doing this seriously is knowing the difference before you commit any capital, not after. That's exactly why the loan to the value, the payment history, and the lien position checks comes first, every time, not as an afterthought. A note like this one didn't get rescued by luck. It got rescued by someone willing to actually open the file and check 3 things a lender had already stopped checking. That's the entire skill, and it's learnable. It isn't a shortcut, and it isn't guesswork. It's a repeatable process. Pull the ledger, pull a current valuation on the property, confirm the paperwork, and only then decide. Skip any of those, and you're not investing. You're gambling on a headline. If you're new to any of this, the free 5-day Become the Bank Challenge walks through exactly how a case file like this gets evaluated. 5 short videos, 1 a day, completely free with no obligation. And if you're already further along that way, the link below opens a real conversation. No pressure either way. So the next time you hear a loan described as worthless, ask the question we ask here. Worthless to who and why? That single question is where every one of these stories actually start. I appreciate you watching this one all the way through. If there's ever anything we can help you with, or you just want to talk it through, don't hesitate to reach out. That's exactly what we're here for. Supporting each other and building this community together. I see you in the next one.